Hello and welcome back to goldstocktrades.com. Today we have a new and special guest with us, Alan Wilson. Alan is CEO of Jericho Oil, which can be traded as JCO on the TSX Venture and as JROOF on the OTCQX. Thanks, Alan, for being here with us today.
It's a pleasure. Thanks for having me, Jeb.
Alan, we've seen a really volatile market the past year in the oil sector. Talk to us about why your company is unique in the oil sector, coming out of what could be one of the most significant pullbacks in maybe more than a decade.
Well, I think what your last sentence there was, there's the last pullback in probably closer to 15 years, and we view it as a kind of once in generational thing. And I think if you were going to be starting an oil company, there would be no better time than now. If you're in the middle of it, you're probably facing debt and other things. So with our strong ability to raise money with a clean balance sheet, you're able to go in and look at assets and buy them at prices you haven't seen for 2 decades.
Alan, let's talk about some recent developments in raising money. Talk to us about the financial situation of Jericho and why that's so unique right now, having that strong position when so many assets are now distressed.
Well, since the inception of the company, we went public in 2012, and of course we used a brokerage firm and banker to go public. But since then, we've raised capital without paying any finder's fees or banker's fees, or very little, except to our existing sponsor. We've been able to find investors who are like-minded, that understand it does take a little time to build a business, and they really believe that we have the ability to get profitable, to start from scratch and get profitable. So a good example would be the financing we closed at the end of last year. We actually closed the financing on December 29th. We raised about $7 million. And the next day we went and purchased an asset from a company called Post-Rock. And Post-Rock would be your typical scenario of kind of blood in the streets, in that we bought the asset at the end of the year. They were trying to shore up their balance sheet. If you look to their news releases, their creditor, their lender, had just demanded a big payment from them. It was a difficult time because even though, we saw the value in the asset, it was at a time when oil was really volatile. You're talking about, low 30s. And so you need to be a little brave, but that seems to have been paid off for us because oil's rebounded. We've had we have the asset now for a quarter. It looks very good. And that company, declared bankruptcy at the end of last year. So that was a situation, at the end of last quarter, about a week or two ago. So that shows that being in the right place with some money at the right time, you can benefit off this type of swing in the oil price.
And I guess the strategy is to grow through acquisitions, and that was a record year for Jericho 2015. Could you talk to us about some of those acquisitions that you've made and what you're hoping to make as you're in this strong position financially?
Sure. When we entered the oil business, it was actually 2014. Oil was at $95, and our first acquisition was a 25 barrel a day project. And to be honest with you, at $95, it was the only thing we found that made sense and we can make work and make profitable. That project was in Kansas, and still today at the field level, we've made money on that virtually every month over the last 2 years. But 2015 afforded a different opportunity. With oil dropping, we could look at bigger projects with more favorable pricing. So we made 3 acquisitions of note last year. We made one in May from Chaparral Energy, where we bought a project from them that they had probably about $40 million invested into. We purchased for $1.5 million, of which we were 50% owner. And project was doing 60 barrels a day. We quickly had it up to 85, 90, and it's been a great project for us. Towards the end of the year, we closed 2 more acquisitions, the Post-Rock one, and another smaller acquisition, which is beside the Post-Rock one, and the pricing on which was just phenomenal. We paid, the collective price of the projects was $13 million, and I believe that as we get close to filing our year-end reserve reports, I think it's going to show that we made a very timely and wise decision for our shareholders.
Alan, could you talk to us a little bit about your shareholders, what sort of insider ownership you have, and what sort of experience those shareholders bring to the table?
Absolutely. So the insider ownership, we peg it at around 23%. That includes one large owner at about 17%, which is the Breen Family Trust. We're very fortunate in that the Breen name is well known in the industry. Ed Breen is the patriarch of the Breen family, is the CEO of DuPont and the chairman of Tyco. We also have other significant investors who have over $1 million each invested in the company, who are people that have built businesses. I can give you an example of one investor who founded his company in 1976. He still sits as the CEO today, and it trades as a NASDAQ-listed stock. To have investors like that who understand what it takes to build a business is not only valuable in terms of keeping your structure intact, which is very, very important for a junior company, but it also gives you people to draw and to ask questions to. We obviously look to engineers and our geologists when it comes to actual decisions about what the projects look like we're buying. But in terms of managing, capital structure, whether to take on debt, whether to do financings, how to grow a business from scratch, we've got a shareholder base that we can garner knowledge from, and that's extremely valuable and rare, especially for a junior company.
Alan, let's talk about what makes Jericho unique in this environment. There's a lot of investors that are looking to come back into the oil sector. They realize that this is a contrarian opportunity, and in contrarian opportunities lies the greatest the potential value gains. So what makes Jericho unique when looking at a whole list of oil companies?
Well, I think there's two points to to answer your question. The first is, you're right, the contrarian view can work. I think I've talked to many investors about this, and I said that in 2008, when we faced a financial crisis, if you had bought a house, a stock, a commodity, virtually anything while the market was down, you would have found that about a year later and longer, you would have done incredibly well in terms of returns. But we all remember 2008. There was talk of it being the next great recession or depression, world economy collapsing. So it takes tremendous guts. You got to really be very convicted in what your decision to do it, because it is a tough decision to make. I point to our acquisition in December, where we said, looks like these guys are going to go bankrupt. They're even doing news releases about it. And even though we saw that, it still took, we looked at each other hard in the eyes before we made that acquisition, and it worked out to be a good one. So I think you need to have a disciplined approach, but not be afraid to take calculated risks. And when I say calculated, one of the reasons we're here in the oil while the downturn is here is that during the heyday when oil prices were so high, a lot of people were borrowing money and drilling wells with it. Well, the one thing I can assure you about the oil industry is that drilling is risky. Not all wells work out as planned. And in this environment, what we're doing is the money we're raising is we're actually buying production. We're buying cash flow. And that seems like a more sure recipe. So I think we're limiting our risk. The second point as to why Jericho and what makes us unique, I think I saw who's on CNBC, I think it's Dennis Gartman, who's been a perpetual bull on oil, and he did say one thing that was interesting when he went perpetual bear, but he went bullish. And the thing he said was, look for the new names to make the most out of this, because if you're buying a company that has a lot of debt and they're making decisions in this low price environment, the decisions they're making is how to make interest payments, how to keep the ship afloat, how to, you'll see the news releases. You talk about cost cutting and things like that. Where really who you want to invest in is the people taking advantage of the blood in this, what they call the blood in the streets, these tremendous opportunities. Again, I'll point to Post-Rock. When they went bankrupt, when a company goes bankrupt, they sell their best assets first. No one wants to buy their marginal assets. So if you're there and able to take advantage of that, then you stand to gain tremendously when the price recovers. And also important in that equation is, in talking about the price of oil, I'm not going to profess to have a crystal ball. I don't know when the price of oil will go back up. I just believe it will, based on the lack of reinvestment in the industry, that it will go up. So when you're making your investment decision, I think it's also best to prepare for lower for longer. And again, buying cash flow, buying production, keeping your capital structure intact. These are all good tactics to have and a good discipline to have in this environment. So I think Jericho's is uniquely positioned that as assets become available, we're able to buy them when there's a recovery. While there's not a recovery, I think we're limiting our risk because we don't have any debt, and we also have good growing cash flow. And when the oil price does start to turn, I think we'll reap the benefits more than others that maybe have some of those challenges that they're facing right now with debt.
Alan, as we conclude, can you give us any near-term catalysts or updates that shareholders could be expecting in the next quarter or two?
Sure. Well, in the immediate end of this quarter, you're going to see us file our updated reserve report. We'll then be able to sort of talk about the value of the assets that we purchased versus what we paid for them. And I think based on that discussion, the question is, what will we buy next? We've shown a very good ability to raise money, even at times like typically traditionally tough times like over the holiday season, and also when oil is low. So we've developed a really good track record. So look for the reserve report. Look for further acquisitions. Our goal right now, we started with 25 barrels a day. We're just over 250, so we've increased it tenfold. And our goal is to get over 1,000 barrels a day. I think that moves us into a category where we'll get more analyst coverage, we'll get a different type of investor, and we are on the hunt right now for those acquisitions. And my feeling is they're out there right now. Companies, as much as oil has had a little bit of a rebound here recently, it's not enough. A company doesn't just turn around because they've had a month-long increase in the price of the commodity. So the opportunities to make those acquisitions are there, and look for Jericho to capitalize on that.
Alan Wilson, CEO of Jericho Oil, which can be traded as JCO on the TSX Venture and as JROOF on the OTCQX. Thanks so much for being here with us today and for giving us an introduction to Jericho Oil and what makes it unique.
Pleasure, Jeb. Thank you very much for having, and I hope we can add some of your subscribers to our shareholder base. Thanks very much.